Trade Genius.
Hey guys, welcome to another episode of the Trade Genius podcast. I'm Philip and I'm here with Bob Kudla as always. And today's episode, we're going to talk about a bright spot in the markets. So without further ado, I'm going to shift it over to Bob and he can explain to you what he's found.
Yeah, hey, thanks, Phil. Hold on a second, guys. Let me go ahead and flip and share my screen with you, and let me know when you guys can see it here, Philip. We good?
We're good.
All right. So, as the title implies, the markets have had a rough go of it. It's trying to transition out. We talked about that yesterday briefly. I think there's a war going on among many fronts here, and we think there'll be a temporary hiatus from the bear for a little bit of another bull run here going into the fourth quarter. But what really shocked me today was, and happily, because I own three of the shippers that we're going to talk about, were they started moving up yesterday, and they haven't stopped. And they're getting upgrades by the analysts. They're holding on to their buying power. And there's two distinct areas of the shipping market that should keep their bids in terms of the spot pricing is one is in dry bulk, and the other one is VLCC, the very large um, the ships. I think I have that wrong. It's the big ships for the oil tankers and also the liquefied natural gas shippers. And so I wanted to kind of go through some of those charts today and just show you them, how they're blasting off. And without further ado, let me also take off the watch list here. So I give you a bigger view here.
There's a little gray box there. That, I don't know if you can move that.
Yeah, I just moved it down. That was actually the Skype box. All right, so this is Frontline. Okay, actually Goldman Sachs bought into this thing a couple of weeks ago, but look at this move here off the bottom here. So 1036. This is our heat map at 28 setting. So it's our normal setting that we look at. When we trade, a lot of times we'll trade on the 4-hour, on the daily. I have the 28 here sitting on the hourly, so you guys can see some of the volatility of this here. But the way in which we trade is that there's a ranger here. This has been capping the action for the channel down. And when you have a down channel, which you're seeing here with these dotted lines and dashed lines, and you see a ranger break, at the same time you see a change in the direction of the chain of our trend, the momentum, should get your attention. And you would have took your first buy here if you were really aggressive. But more importantly here, you would have took your buy here on a switch of the Ranger with the heat moving up into the buy zone here. So, I mean, look, this is a nice move. This is a 10% move, guys. So it may not look like much, but 10% in a day or two, not bad. So another one that looks very similar is TK Tankers, as their name applies. And look at this move, same kind of pattern. They had this dip down here. We had a move higher, we had a higher low. We had a continuation buys. One of the trades that I like to see a lot is when the price action starts to accelerate away from a slower moving average. And that means there's acceptance of that price. We broke the range and it took off. Now, I don't own either of the two I just mentioned, but I do own these. So here's TRMD, which is another shipper, but they locked in their contracts for out 3 or 4 years. And you want to look at a chart of a company that knows how to do their job. Look at this move from $10 all the way up to here. They blew up the coming head and shoulder pattern everybody was looking at and lifted again. But look at the dividends these guys pay. Okay, 58 cents a quarter. All right, this stock is trading at the time it was trading at $18. So this is north of 10% dividend, and they have pricing power. So I hold this one. I'm still holding it. If it pushes up into the mid-20s, then I'll think about maybe selling it. But in the meantime, I'm collecting money, and the price action looks just awesome. And so the next one I want to show you is give me 1 second, on GSL. Okay, global ship lease. All right, so this one again broke out of its range, got a continuation buy, pushing out of its ranger, and again another buy here, 16 to 17.35. I've owned this one for a while, but again, look at the follow through from yesterday. This is what you want to see. They want to own these. They want to own these shippers going into the new quarter. Again, cash flow is king. These guys have cash flow. They're holding on very well. And again, I also own this. This shipper. Another one we just recently bought, and I actually shared this with our group, is not only tankers doing well, but the dry bulk shippers are doing well as well. So here's Star Bulk Carriers, right? So on hourly chart, this thing has just been grinding higher. Okay, it had a push down, and when it popped back up and the heat came back up off this the moving average here, we went ahead and we bought again, and it's grinding up. And what I'm really like about this one is, let me go on the daily to show you, is that the dividend is paying $1.65 a quarter. Okay, it's nearly $7. They got buying power. When these dry bulk shippers are shipping food and coal and iron ore, and right now coal is like the commodity you want to own, and also the wheat is being transported now out of Brazil, Argentina, United States. You have Canada, Australia, Ukraine, and Russia. A lot of action going on now, moving the wheat crops into the consuming nation. So it's a great company, and what I like, what I'm seeing here is potential inverted head and shoulders. It's up over it's moving VWAP. The price action is moving higher. Again, a continuation buy on this thing. On the daily, it's breaking out of the heat, and so a lot of things to like about this. This stock here, and like I said, I also own this one, and we also signaled this one out. Now, one that I own that kind of blew up on me. Not everything's perfect in life, but I'm still holding it. Is ZIM Integrated Shipping? They pay a huge dividend. A lot of people aren't believers in this company. It went up from basically $9 to $80, and it came all the way back down to 25. But their dividend yield right now is scheduled at 100% of what they make, and they only pay out of cash flow. So they're only paying out 20% of cash flow each quarter. They reaffirmed guidance, so I'm expecting another $4 dividend come November on this, and then at the end of the year, they pay 30% out of the total, less than what they've already paid out. Last year they paid out an $18.75 dividend. That's gross. There's an Israeli tax in there, but still, it's ridiculously high. And they're doing some really neat things too. A lot of people just think, oh, this is an old line container shipping company. They do that, but they're also getting into some high tech shipping management systems, and also they have a huge contract with Shell, and in terms of their changing their mix of fuels that they use to lower cost grades. And then also they now are leasing out the liquid natural gas shippers, and so they're moving their mix. And so I like the company as long as they maintain cash flow positive at this price level. It's worth buying. And then the last one I'm going to show you, excuse me, is FLNG. If I didn't already show this one, stop me, Phil, if I'm repeating myself. This is one you want to own as a. This one wasn't up today, but this is a FLNG out of shipping a lot of the natural gas liquefied out of Middle East and the United States into Europe. This is an 18-month play, and you're going to see this This shipper also moving much, much higher. And check out the dividend on this one too. Okay, it's paying $1.20 a quarter, 485 bucks. $5 a quarter on a $30 stock is pretty darn good. Okay, and these things, they're all holding their prices. They're booked, and their order books are firm, and their pricing is firm. And so these things are just going to be cash machines. And look, you want to own cash now. And the only reason why these guys are struggling at all is that they're competing against a 10-year rate that's been climbing. But after December, I think the increase that may or may not come in December for the Fed, they're definitely going to be pausing their Fed funds rate to evaluate what damage they wrought on the world economy. And companies like shipping companies and probably even like utilities will do well in 2023. These are just great companies to own a position in your portfolio. They're volatile enough that you can actually trade in and out of them if you like. So those are the things that I wanted to go on, Phil, on the shippers. And I know it only took about 10 minutes to talk about, but there's an ETF I want to show you too. So let me just do that one. BDRY.
Bob, you said you want to own money. What does that mean exactly?
Yeah, you want to own companies that are generating cash.
Got
So
it.
we're having a big shift here in the stock market, where all it mattered was if you can grow eyeballs and you can grow revenue, but you're not growing cash flow, it didn't matter. Well, when you had 0% interest rates, it didn't matter because you could just keep borrowing with really no cost to you. Okay, it's just all you did was your principal just got bigger and bigger and bigger, but your interest expense never really ate into your business. Well, a Fed funds rate at 4.25 and 4.5 definitely will start eating into your business. And plus, you're no longer going to get that kind of rate. You're going to be paying that. You're going to be getting B rated paper. Instead of being an A rated company with you if you're not generating cash flow. And so investors are going to shift away from those companies. They're going to shift away to companies that own cash. They're generating cash. They're giving it back to their investors. That's a discipline. If you do a good dividend, you're considered a disciplined company. As long as you're not borrowing the money to pay out the dividend. And at 4%, you're not borrowing the money to pay the dividend because you're probably borrowing at a 7 to 10%. And so your companies that can continue to produce cash are going to be much more valuable over time, Phil.
All right, got it. Thank you for that.
Yeah, no problem. And then the last one I'll show you here is this is the breakaway shipping ETF. If you don't want to own any individual shippers, if you just flip the model here, basically you're going from, this is on a daily chart, you went from a downtrend that's been violated now, and so it's now a buy to dip kind of environment. And so this is a good one to own over time. There's no dividend showing here to speak of. I'm not so familiar with this one. It was just brought to my attention about a week or so ago. So I'm going to do a little bit more research and watch it. But if I get buy signals on it on the 4-hour chart, when the heat comes back up again, I'll be putting more trades out on it. It pushed down here on the Ranger. Usually when you get a triangle like that and it flips it and price comes back into the range, this is going to probably be a buy again really soon for a quick swing trade. So some good opportunities for us in a lot of areas. I know, yesterday Phil talked about crypto. I think crypto's definitely tied to the liquidity of the market and the actions of stocks. And, that's potential turn here, but these shippers are paying you today. And you should have a few of these in your portfolio if you want to have a good balance to your, especially, if you're older and you want to make sure you have cash. A lot of these guys are optionable too. Like ZIM, I own ZIM, but I sell calls against it as well. So there's ways in which you can just keep working your cost basis down over time. So that's pretty much it, Phil. It's a Saturday. I don't want to hold people on too long, but I hope you guys enjoyed this. And Phil, do you want to just kind of take us out?
Yeah. So thanks again, Bob, for finding these picks here. I think that's a little tiny sector of goodness in an otherwise pretty bearish market. But yeah, awesome find there. And as always, guys, thank you for watching. And if you could hit that like and subscribe button and ring that notification bell. And we love the interaction below that we're getting from you guys. So please comment on what we're doing, what you like, what you don't like. And if you are seeing something that you want us to cover, please let us know below. We'll get back to you. We're watching every comment, and we'll definitely pay attention to things that you guys want us to cover, basically. So again, thank you for watching, and I hope you have a great rest of your weekend. We'll catch you guys on Monday. Take care. Bye bye.
Bye bye.